Hi, this is Randy Finney with Right Side of the Chart, and this is a late day market update for Friday, November 9th, 2018. This will probably serve as the end of day market wrap as well as we head into the final half hour trading here. Let's just go over the charts real quick because there have been some significant developments worth noting since the last update earlier today. As well as a couple things that I didn't cover in today's earlier video. Excuse me. So starting out, this is the NQ NASDAQ 100 E-mini futures 60-minute chart. Let's zoom in here a little bit and take a quick look at this. All right, so from these charts were first posted back on Tuesday with the targets down here to go on to put in a divergent high, which we did break below this trend line and hit this first target, and which we did today. And right when that was hit, right about the time we bottomed today, I posted on the front page an update on front page of right side of the chart that we were at support, that this target has been hit, as well as a gap backfill on the QQQ. So I'll show you that chart in a second. And so therefore I said the odds for a reaction are pretty good, a bounce or a consolidation, and that's certainly what we had. So we're bouncing off there, and let's take a look at where to go. And again, I also made mention in that post. Somebody asked me earlier today in the trading room, Randy, hey, if those gaps are backfilled today, would you be covering your shorts? And I said, well, that depends. If for an active trader, because I do both, I'm a swing trader, I have swing positions and longer term accounts, and then the active trading account. And as an active trader, I like to game these reversals, bounces. It might not be much, but when you're trading NQ, even every quarter point is a pretty nice dollar gain. So this is what we did today is we reversed right on Q, right off that target, and again that coincided with a backfill of the gap in QQQ. So while SPY fell a little shy, and I'll get to that in a second, I often talk about this in trading. This is why I watch both of these two indexes, because if I am long or short and one hits a target, the other doesn't, you may want to cover because that can often prompt the reversal. And right now, most eyes have been on QQQ and the big tech stocks, the market-leading FANG stocks. So there it is. There's your reversal. And again, it doesn't look like much. And in the scale things, we're still down, on 1.5% on for the day on NQ. I'll check QQQ in a second. Now we have bounced back to resistance. And if we get we may get another shorting up. Somebody asked, they wanted to know where to add on their final lot of SQQQ. They're shorting the Qs. And I said, well, if we get it, great. Maybe a back test here. We'll have to see how things look. A little over half an hour could happen today. And that would certainly be an objective place. And you can, short there with a stop somewhat above. And now we may turn down here because I had that 70, 60, 79-ish level earlier as support. And that could stop it, although that level's already been traded through a few times. You can see there are some reactions. This is what I call minor support, more so, this 70, 60 level. So there it is. There's your two levels there. PPO is starting to curl up, and I'm going to show you some things on the daily chart that says, we could have a little more to this bounce, and it could be a lot more. We'll see. I'm going to point those levels out and let you guys decide what you want to do. Okay, and here's that ES 60-minute chart. Again, these were posted on Tuesday, and again this morning we did break down, had started to get some nice selling. So you can see, as I mentioned, ES reversed just shy of my pullback target, which is also just shy of the gap on SPY, but that doesn't matter because, one or the other is going to hit their gap and have a reaction, and it didn't. If they both happen to hit those levels at the same time, great. But today it was more about selling in the heavy tech-heavy QQQ NASDAQ 100. Therefore, the NASDAQ 100 led the way down, and that's often the case, not always, but often, because ES in the S&P 500 has utilities, healthcare, a lot of defensive issue stocks, and they tend to not fall as much. They have a lot of dividend-paying stocks, blue chips. And so they hold up. So there it is. And again, same story here. Watch for both. Keep an eye on both of these. We have bounced back to a minor resistance level. It was former support, now resistance. And if we take that out, and it could happen today. We still have almost half an hour left in the trading session, or it could happen tomorrow. Monday. I'm sorry. Or anything can happen. My scenario, my longer term scenario, whether I'm talking about the short term stuff for active traders, maybe looking to, well, take it as you want it. These can be for longs looking to buy the dips. You can use the same support levels that I'm looking to, confirm or add to shorts on a breakdown, as where I'm looking to maybe add back short exposure on a bounce. for active trades. Others may be looking to go long on a break at that level. So there it is. Those are the levels to watch on the futures. Now let's look at some of the bigger picture stuff. This is what I didn't cover today. I did cover QQQ quite a bit, but on the daily chart, what we have right now, it's pretty interesting. There's a lot of moving averages out there people use. I like to use the 50, 200 day are some of my favorite ones. As far as daily EMAs on the daily time frame, and you can see right now we are sandwiched between there, support and resistance between those two lines. That 50 day, as I did mention in today's earlier video, go back a little ways here. You can see it's done a great job of acting as support throughout most of the year when the trend was bullish. Support, 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 support. That was correction number one, correction number two, and then the aftermath. They will call it the after tremors if you want. But other than those two big corrections that we had earlier in the year, you can see that the 50 EMA has done a bang up job of defining, acting as support. And in technical analysis, support once broken becomes resistance. So you had, of course, that downtrend line backtest and the 50 EMA backtest the other day. That's where we, added that short on QQQ, and that is now you have that as resistance overhead, the 50 EMA and the trend line. But you also have the 200, which is still was successfully defended today. By defended, I mean we broke down back here on the 200 day. It acted as resistance as it should on several attempts. When we finally broke it, we didn't just limp there above it. We had that big 3.2% gain in the NASDAQ, consolidated the next day, went back down today, took it out intraday, but so far we pierced it and printed a successful close. So I'm going to give this, and again, don't take too much into day-to-day action because you're going to go back and forth. Your head's going to spin. Like I said, I use that analogy, the heavyweight fighters just exchanging blows. But so far, there's a potential to add on to this. Like I said, there is still resistance overhead. So nobody's won yet. It's still anybody's game. A lot of resistance overhead. But today was a successful defense of the 200 day on a back test of it after breaking out. So look at it that way again. Another way to look at it. You have a breakout. And very often after breaking out, whether it's a trend line or a bullish chart pattern, you come in and back test the breakout level or the resistance level that you broke out and then move on. So that's something to look for. And again, a lot of work to be done. So just because we defended it today doesn't mean that it can't give way next week, nor does it mean that this 50-day can't be taken out. So let's just watch that small range. The good news is we compress here in this range, something will happen sooner or later, sooner than later. You can see the averages converging too. By the way, if they do, if the 50 crosses down below the 200 day, that is a death cross, we call that, when the faster moving average crosses below. And just real quick, before I move off that chart, we look at quite a few stocks here. Here's Apple. The 50 is still above the 200 day. Apple's defended that, but it is also sandwiched between its 50, which has acted as good support. You can see in the past here in the 200 day. Amazon, and don't worry about the trend lines here. Now also sandwiched between the 50 and the 200 with these pinching. They're getting dangerously close. Microsoft is just above that 50, looking a little bit better than most other stocks in the top 5 of the NASDAQ 100. Bounced off, held support on the 200 day. But again, you got the 50 coming down pretty quick. Not too bad here, but on Alphabet, you do have, here's a other share class, GOG, a pending bearish cross, and here's a class A shares, also a pending bearish cross or death cross on the 50 200 day. Again, I probably should have used another board. That one's about as good as we have it. There it is. So watch for this. And the more market leading stocks, here's Facebook. We already have a death cross in play with the 50 crossing down below the 200 day. And I'm just going down the line in order of market cap, descending order of market cap. Cisco, not yet. Intel, we already had a death cross, bearish crossover there between the 50 and 200, and we're still below there. So just one thing, any one thing like that doesn't make or break, but more and more stocks, if you continue to see more and more 50s crossing down below the 200 days on key stocks, that's not a good sign for the market. But as of now, there are quite a few above there, and as I just showed you, the most important thing really, just focus on the indexes for now, and we're pinched between that level on QQQ and then SPY Let's see if I can give you a cleaner board. There it is. The 50's coming down pretty quick. It hasn't crossed yet, and we haven't had a bearish cross in a while, but watch for that. And you can see a similar story to QQQ as I just showed you on the SPY. We are now sandwiched between the 200-day and the 50-day. We popped above the 50 briefly, just like QQQ that day. This was Wednesday right here, by the way, that big up day. QQQ had just popped above, as did SPY above the 200. SPY also took out the 50. On Q, it was a little, the Qs, it was a little higher. Another day there, and we fell back down below. So, and again, we have volatility. You're going to punch up and through. So it's not like suddenly uber bullish if you're above it by a little bit and uber bearish if you're below. It's really, like I say, important to let's see where we close the week. We'll have a little bit of insight today, but I can tell you right now the 200-day moving average on a daily chart is the same as a 40-week moving average, which I put a lot of emphasis into. So we're going to close now unless the market happens to dump in the final 15 minutes of trading, and it's moving up right now. We'll probably close it back above that 40-week moving average. And let's see on QQQ as well. You know what? We're going to be so darn close to it on QQQ. Here it is. That effectively this is a back test unless we happen to really shoot up in the last 15 minutes here. You can see right now, I'll turn that line up for you. For all intents and purposes, let's just consider this a back test because all that matters is where the body of the candle closes, not these intra-week pierces. So to kind of put it back into perspective here, this was an impulsive break and close. There's our close for the week at the bottom of the red candle's body. The next week we close below it, and this week we're going to close on it. So I look at this as effectively a back test so far, and just above it we have that key, very significant long-term multi-year trend line on QQQ, and we're still above that. I'm sorry, below that. And I actually put a heavier weighting on this trend line than I do on the 40-week moving average, just for whatever that's worth. Okay, and I told you we'd look at the gaps on QQQ. You can look at it on a daily chart like we just were. You can see right there, there's the gap. You have the bottom of the top of the body of that green candle. That was where I'm putting the crosshairs now. That was Tuesday's close, and we had the big gap up on Wednesday. So the bottom of today's candlestick, that candlestick tail or shadow right there, it was almost a perfect backfill of today's gap. Here's a 60-minute chart, and we zoom in real close. See this candle right here, right up there above the cursor. That was Tuesday's close right there. So at the top, and I had that line, give or take 170.40. I can tell you exactly where it was. The close was at 170.26, and today's low was 170.16. That's close enough for government work. The 10-cent difference there. So that was effectively a successful backfill, and a lot of traders know that most gaps are eventually filled sooner or later. So for the bullish case, if the bulls don't want to leave behind any unfinished business, you can look at it this way: they went ahead and backfilled that gap today, so that doesn't leave any unfinished business if it wants to continue on up there. But believe me, a lot of work to be done. I showed you a minute ago on the NQ 60-minute charts, a back test of this trend line because this was a pretty clean wedge. On the ES and NQ, we had negative divergence as well. We don't have it here on the 60-minute chart of QQQ, but we did on the futures. And so a pop back up to back test that, and then you still have another gap overhead that could act as resistance right here. So again, a lot of work to be done. None of this changes my longer term bearish outlook, but there's certainly the potential. It's still anybody's game right here. My view continues to remain what I showed you earlier today, that we'll probably reverse here, gap down Monday, or pop up here, maybe back test these lines. Again, I can still see the possibility going all the way back up to 178. I don't think we get there at this point, but if we do, anything above that really starts to erode what the bearish case that I'm looking at. And that, again, that's 178, or would be 178 on QQQ. Pretty significant resistance there. And of course, it'll have taken us back above those long-term trend lines, the long-term moving averages, everything else I'm watching. SPY, I have different levels as well, but for the most part, SPY has this resistance zone. And again, I mentioned this today and earlier in the video that the rally last time when we had the initial leg down early in October, we had a snapback rally that failed right here around 281 change, and that's where Tuesday's sharp rally and then the following day as well as Wednesday's highs, that's where we failed. So those are big levels right now to watch. And if I wanted to probably say the most important level right now to watch on SPY would be bulls want to see that get taken out, and the bears would like to see today's the gaps from Wednesday to be backfilled. Remember, that didn't happen today. I mentioned that because QQQ backfilled first and reversed on the backfill. Therefore, SPY was halfway into the gap, as you can see here. So the gap I'm referring to. And because QQQ reversed, so did SPY. You remember, the SPY, the top components of SPY, they're not identical, but most of the same names, Amazon, Apple, Microsoft, they're all in the top components of the S&P 500 as well. So when you have program buying, money flowing in, the algos are buying the NQE minis, it's going to drive the SPY up just as well. That's why you're going to see these guys move together. So that's it. And SPY is not too far from back testing that wedge from below. Maybe we get a kiss on the initial or reversal on the initial back test. Sometimes you come up back test for a little while. If we pop well above there and prints several 60-minute candle closes back above there, then maybe this is just a fake false breakdown or bear trap. I mean, it was certainly good for a day trade today off those levels I gave you, and especially a reversal when QQQ hit that NQ and QQQ hit those pullback targets. But as of now, that's my scenario, is that most of this reaction and the bounce off the bottom of that gap in QQQ is probably over, and I think we can reverse anywhere from here into the close. Wouldn't surprise me to see a little dumping into the close. If we do, it shows me that the institutions are still being squeezed, still selling, using any bounce to sell into, and that the supply-demand dynamics have shifted. That's what it's all about in the market. It's simple as that. If you have more buyers than sellers, stocks go up. If you have more sellers than buyers, talking total volume wise, prices will go down. And so we'll see. So let's see what happens next week. Swing shorts, as far as those in the QQQ short trade or anything else, I don't see anything today that changed. And in fact, if nothing else, we're still going to close down. Remember, despite the bounce off the lows, right now as I'm doing this video with 10 minutes to the close, SPY is down 0.88% and QQQ is down 1.63. So like I said, that's a pretty bad smackdown to those that went long here, or smackdown to the bullish case. Let's not personalize this. By fading 100% of that big green candle and then some so far, especially in QQQ. So I'm going to wrap it up here, give you levels to watch, moving averages, price levels, and this will be continued next week. To everyone out there, have a great weekend. And as always, if you like the video, thumbs up is greatly appreciated. Thank you very much.